Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in insane markets and coming up with some professional currency trading lessons for you. I've been trying to think about what I can keep doing to give you some insights for your own personal trading. And what we want to do in this lesson is we want to talk about Fibonacci, because everybody seems to be really interested in Fibonacci trading, which is great because it is an important tool to have in your toolkit in order for you to maximize profits and limit losses. So in this video, we're going to be talking about, again, the Fibonacci wave theory and how we could use the wave theory in order to project prices. In other words, what we're trying to do with Fibonacci wave is we're trying to get into a trade and hold on to that trade with both hands in our teeth, because the big ones are going to be the ones that make our month. Okay, so we need to capture some of these larger moves. So in this video that we're going to be going over, we're going to be going over Fibonacci wave, and I'm struggling with myself whether or not I should give you a really kind of super secret way of looking at this, and I probably will. I'll probably give you a ratio that is a proprietary ratio that we developed at Casa Trino and on the proprietary trading desk, and I think you're going to find it kind of cool and useful, and you could use it on different points on the chart as long as you're by a recent really deep low and also a recent high. Okay, so without further ado, let's get into the video. Hey, welcome everyone. Tom here from Park Avenue Trading with a trading lesson for you that is, I assure you, is nowhere to be found on YouTube for all the gurus out there. What really gets me frustrated, and the reason why I'm doing it is, one, yeah, it's a little bit of an ego boost, but two, is a lot of crap out there that you just got to stay away from. There's a lot of stuff that's just canned information, and you just got to realize you could probably learn more from Investopedia than from some of these people that are out there, 21-year-old gurus. I've forgotten more of what they're trying to learn than actually what they're talking about out there. So I'm not here to disparage anybody. I'm just saying it the way that I see it. I am a trader. I take my losses like anybody else. I'm not saying that I make money every day. I do not, but I try to catch. When I'm right, I try to hold on to my trade for as long as I possibly can. And this is what this Fibonacci wave sequence has done for me. So I'm going to clean it up a little bit for you so that we can go step by step. So I have written here the sequence of the wave, okay? We're going to start with a 21 bar high. Now, in order to confirm, now, if you look at the number sequence, okay, of Fibonacci, you got 3, 5, 8, 13, 21, 34, 55, 89, to infinity, right? So I'm starting with a 21 bar high. So if I write the sequence down, 3, 5, 8, 13, 21, 34, 55, I know that by going back one sequence, one number in the sequence, I come up with 13. So I'm looking for a 13 bar low. Now, why am I doing this? Because Elliott wave theory, okay, Fibonacci is riddled throughout Elliott wave theory. Now, the thing with Elliott wave theory is that it's nebulous at best, but if we apply the Fibonacci principles to it, we get a better understanding of what the marketplace is whispering in our ear. Does it always work? No, there could be a lot of stopping and starting, especially if you use a lower sequence. Like, you don't have to start with a 21 bar high. You could start with an 8 bar high. Then you go to a 5 bar low. Then you go to a 3 bar high. Then you drop back down again to an 8 bar low. then a 5 bar high, and then a 13 bar low. Like as long as you stay within the sequence, you basically can use this. And what I think that it does for retail traders like us is it keeps us out of the marketplace when markets aren't really doing anything, and we get the fear of missing out type of mentality that causes so many losses. So without further ado, let's just go, I'm going to try to stick to the sequence itself. 21 bar high, 13 bar low, followed by an 8 bar high. That means the sequence is completed. Now, there are two important ratios that I'm going to introduce you to that are proprietary ratios. Maybe I should, if I could write it down. I don't know if I could write it down. Maybe I can. Let's see. The two important ratios from a high are 0.9944 and from a bottom, this is from a high, so let's write that down. From a bottom, it's 1.0056. Those are the important ratios that we're going to be working with. Now, I don't know why that disappeared. Okay. Well, the ratios, again, write these down. 0.9944, 1.0056. These are proprietary numbers I'm giving you. There are other numbers that I go over in personal mentoring, but these are important numbers. And what the 0.9944 represents is a potential break point from a high. It's a point that the marketplace should come down to. If we haven't found the high, it should bounce off of that and take the recent high out and continue higher, saying we have not found the 21 bar high yet. If we're using 1.0056 from a bottom, that's a resistance level that if a market breaks that, it should continue higher to the next level, next trend reactionary number. Okay, I've introduced you to trend reactionary numbers. Those I teach, in a personal mentoring situation where people are paying me a lot of money to learn that stuff, and I'm not here to talk about that. I'm just basically those are really the big numbers you have to understand. But these are just as good to get you going, and that's what I'm trying to do here, get you going. So let's go over this. So we start with a 21 bar high, 13 bar low, 8 bar high, completes wave 1. Then we're looking for a 21 bar low, 13 bar high would complete wave 2. 34 bar low, 21 bar high would complete wave 3. So the 3 waves would be completed. Now the marketplace could continue and extend to a 55 bar low. Then it would need a 34 bar high. But let's just stick with this, okay? And let's not try to get too confusing. So how do I know, this is a 21 bar high? Well, obviously, if I go back 21 bars, it's the highest, it's a high. But remember, we always stick with the same scientific principles with Fibonacci, okay? The retracements. Now, I did a video on this, and please, if you haven't seen it, go back and check it out. But what we're going to do is we find this high here. Yeah, it's 21 bar high, but all right, what's the reference low? We need to go back. I'm going to crunch this up. We need to go back in time to the last time the market traded higher, and it's right here. So we got point A, we got point B, and then we got the reference low that we're going to work off of. That's where our Fibonacci scale is going to come in, okay? But then the wave is basically going to help us determine where we're going with this thing, okay? So market loss states that a downward movement, market principle, it's not like a law, like a market, tell or a principle is that a downward movement should stop at the point of the origin of the upward movement. So this level here would be like the level that the marketplace should stop at and then retrace back upwards. Now, it may not go as high as this high that we have right here, because basically it's just an impulsive move from the bottom. When these marketplaces break these lows, okay, they're basically saying, man, there's a lot of people that want to sell this market. Okay, now a lot of people bottom hunt, and I'm guilty of it myself, because I have my trend degrees and I like to play around with trend degrees, and I look for a trend degree low, and I look for another low, and I say, well, it's a low risk trade, it's only going to cost me 15, 20 pips. If I'm right, I'm going to get like 90 pips out of it. A lot of times I'm off, and I always kick myself and say, why am I bottom hunting? Why am I top hunting? I shouldn't. I should wait for the marketplace to tell me that the top has come in. Okay, so this method will give you an idea that perhaps, and I always say that perhaps, because nothing's written in stone in trading. Okay, so if we take this top, okay, remember, this is the sequence I'm looking for, 21 bar high. I found it. I also found my reference point low, okay? So now I have my Fibonacci scale that I have up, all right? If I take this 21 bar high, which is 125.75, right? 1.2575, and I multiply by 0.9944, I get a price of 125.05. So I'm going to put that up here. From this point, that's fine. That is basically what I would call a potential break point. Right there's a potential break point, okay? The marketplace really shouldn't break this. It should, if it was truly going to go back up, if you notice, kind of corresponds to this previous demand point or low pivot point. It broke that low pivot point. So if you were just trading without this and you said, well, I'm breaking that low pivot point, I could take a short on this, most likely you're going to say, well, if it breaks that low pivot point, I could probably get the price back. I could probably get my trade back there, which you would, okay? But you're not capturing the full length of the move. You're basically just taking a stab at things and, collecting pips. Now, okay, that's great if you could do that every day, but you can't. A lot of times what happens is you make a mistake one day, and a mistake is not following your trading rules. It has nothing to do with losing money. A mistake is not following your trading rules. Dr. Van K. Thorpe taught me that. And he hammered it into my head. A mistake is not losing money. A mistake is not following your trading rules. So we have this potential break here. So now what am I looking for? Well, I'm looking for the second part of the sequence, a 13 bar low, okay, followed by an 8 bar high. Well, I have a potential 13 bar low here, but is there an 8 bar high following it? No. So the marketplace basically traded down to here. That becomes my new 13 bar low. It has to be followed by an 8 bar high. So what I'm doing is if I'm just trading my wave principle, which generally I do with my Genesis, it's a different system, but this basically gives me an idea of what if I should be holding a Genesis short, which is a different system altogether, okay? But it's the one that I make my trade calls off of every day in a Telegram trading room. So if you join the trading room, you'll get those calls, and they're pretty accurate. I should be a billionaire if I had, instead of having, nads the size of a church mouse. But look, that's another story. Like, I'm only in this game like to make a living. I got an internal thermostat with money, that I have to that I haven't been able to overcome. Basically, I'm happy making the amount of money that I used to make in a bank, and I don't have to go anywhere. And actually, I set my own time. So, but that's for another video to talk about my psychology itself of trading. It plays such an important role. But anyway, so we have the potential break point here, right? Market price breaks down. Notice it could be chance, Marketplace gravitates back right up to it, and it creates a 13 bar low. It then makes an 8 bar high, right? This bar is the highest bar of 8 bars. Now I have potential. Wave 1 is complete. Wave 1 is complete. So if I take this, wave 1 is basically this. That's wave 1. Now, a break of this low, okay, would indicate to me that, okay, now we made the 8 bar high. We're going for a 21 bar low. Now, in order for that wave 2 to be completed, a 21 bar low has to be followed by a 13 bar high. All right, so now we're in the trade. Now, this is it. You don't move. Let's say you just sold that bottom. Okay, well, where's the stop? Well, you know that you got the reversal point up here at 125.02, but that's not really the reversal point. Okay? This is where the 1.0056 comes in. This should have been support. It wasn't. It broke. Okay, but the market's always evolving. It's always moving forward. You got your 13 bar low followed by your 8 bar high. If you go to the lowest point right here, if you took this short right there, where do you have to say, I got to get out? Something's wrong. I am not, it's not working. Well, the low is 124.70. Is that right? 124.697.70. And I multiply 1.2470 multiplied by 1.0056. Resistance reversal is at 125.39. I took 124.70. I multiplied by 1.0056. Who talks about this out there? Everybody you know that's following all these other gurus. Get them over to this channel. Okay? This is where you got to be. 125.39. So, 25.40. Fine. Let's make it a funky color. Let's make it a light blue. That is the uncle point. That is like, this is something's up with this. We may be, now you got the previous high. We could talk about that, but that's just it. Just using the ratios. Now these ratios are Fibonacci derived. They're not just made up. Okay, but they are Fibonacci derived. We came up with this in, I don't know, 99, 2000, something like that. Like, we always had these ratios, but we weren't applying them to the wave theory itself because we really didn't have the wave theory solidly locked in. So we were using these points just off of tops, 21 bar highs. Now that was related to the turtles, the turtle trading system, 20 bar high, 20 bar low, that type of thing. So we used a 21 bar high because there's a Fibonacci number. And then we applied these ratios. Because I said in a previous video, I didn't have this solidly until like 2000 where I actually started working on it, and it progressed for me. It didn't just happen. So there's the uncle point. So if we would have got short at, say, 124, say 60, okay, make it worse. So we got 1.25 40, 1.2460. Our R value is 80 pips. So we know 1 R is 80 pips. 1 R profit's 80 pips. But now we could trail with that. You could trail. Okay, so you got 1 R in, all right? But we're looking for what next? A 21 bar low, followed by a 13 bar high. That would tell us that wave 2 is complete. Now wave 2, once wave 2 is complete, we're looking for wave 3, which is a 34 bar low, 21 bar high. Okay, but let's see if we can find that. I haven't worked it out, but here's our Fibonacci scale, right? So boom, we're breaking our fib levels. Okay, like people that aren't aware of this, we go, oh, wait a second, I'm down at 0.618. That's, that should be pretty strong support, and maybe we're going to bounce back up, and then they take it, and then 2 hours later, boom, the marketplace. Now we've got to also talk about impulsive moves as well, like and I'll do another video on that. Like, this is an impulsive bar, and this is where the 50% ratio works. I mean, it helps. Okay, but again, that's for another video. But that's an impulsive 1 hour, yours, it's going down, right? So this is definitely a 21 bar low. Is it followed by, let's crunch it down, a 13 bar high? No, it's not. If I count all the way back, I'm not going to have a 13 bar high here. Boom, new 21 bar low. So this thing is keeping us in the trade. It's keeping us locked in. Okay, right now we're trading at 122, say 40. Okay, so if we got short at 1.20, where did we say we got short at? 124, 124.60 or something like that. 124. Since it's just fun with numbers. Is 220 points. It's 2.7 R, right? Something like that. Yeah, 220 divided by 80. Well, 40 it was actually. 60, 70. Yeah, it's 2.75 R right now. Okay, so here we have a potential 21 bar low. Needs to be followed by a 13 bar high. This might be it. So let me get my little measurement thing here. Yeah, so that's my 13 bar high. Now wave 2 is complete. Where is wave 3? Wave 3 is a 34 bar low with a 21 bar high. Okay, so now I'm looking for, and actually it takes us right to this marketplace right here. Right there is our 34 bar low so far. It hasn't been taken out yet by a 21 bar high. So the marketplace is still evolving. Now we could use the same damn ratio. Okay, look, if I go from this low of 121.90, I multiply by 1.0056, 122.58 was a point that the marketplace basically should say, hey, all right, we could potentially be going up. What's the high here? Right to 122.63 before it got hit back down. So did it really break it? Not really. 58 to 63. It's just, not really that. That's where, but you could use that point or that ratio at any time to basically find resistance. So even if a marketplace trades above that point of the 1.0056, let's say it goes up 30 points above that. What I like to do is, okay, it's traded above that ratio. If it breaks that ratio and breaks the low that it was made underneath that ratio, I would go short and put the stop at whatever high was made. Because now I'm basically saying from that point I can go 0.9944 down from it. And, you know, get some good moves. So there is your Fibonacci wave with your magic ratios. Go back to the beginning of the video if you didn't write them down. 0.9944, 1.0056. If you like what you see, please like and subscribe. Let me know what your thoughts are on this. You know, have you used it? Are you intending to use it? Check out the ratios for yourself. Leave some comments for me. I want to interact with you, peeps. And remember, always trade what you see, trade your points, and enjoy the party, but dance near the door. Cheers.